Fools, we said it on the show yesterday. We said it on the show the day before.
I got it off Bespoke's Twitter feed, John.
Yeah, right. Yeah. You don't want to be short the highest short interest stocks right now. That is what.
But that's been true since July.
Yeah.
It's just even more true right now.
They are targeting the highest short interest stocks as a percentage of float. So this is fascinating. We're living through something here. I'm not sure what it is yet, but we're living through it.
Yeah, well, and part of it is too, right? Because of the squeeze on some of these short folks, they've had to sell other positions to get source of funds to be able to cover the shorts, right? So
you see the market down yesterday?
Yeah, exactly. Yeah. So I think, there's a lot of people that's like, hey, I'm going to rush into these stocks that are ripping. I think the right move, if you're kind of a long-term investor or what have you, or wants to invest in quality is, like PayPal traded down 5% yesterday. I think like a lot of Match was down like 5 or 6%. Redfin was down 6 or 7%. Like some of these companies, that'd be where I'd be looking versus trying to chase some of these stocks.
Absolutely. So about 4 or 5 years ago, I was involved in a company called Horsehead Holdings. Do you guys remember Horsehead?
Did it go to zero or close to it?
It went to zero.
Zero, yeah.
It got pushed. They had loans that they took out, and some of the loans came from non-bank sources. They came from funds, and based on a very technical on a technicality, the funds pushed Horsehead into bankruptcy. This was a true short attack. It was almost identical to what is happening now with GameStop, but for one big difference, that didn't work out.
Have y'all heard of this company Cross? Am I saying this right? Cross?
Costs. Yeah.
Costs. Up 2,000% in a week?
It's a headphones company.
Why not?
Why not?
Why not?
Right.
Well, and I'm sure you see a couple of the questions, so this morning, in a lot of these stocks. So,
I'm going to stop sharing this now.
Robinhood and a bunch of brokerages have shut down the ability to buy these stocks. All you can do is sell them. You have thoughts on that?
They had to. You know why they stopped yesterday? Because they couldn't they couldn't keep up with their margin calls. They couldn't keep up with their margin calls. This is a potential disaster for the brokers, right? Because a brokerage business is essentially, vacuuming up nickels in front of a steamroller when it comes right down to it. And there was more volume by dollars on GameStop yesterday than there was on the London Stock Exchange. This is not a little guy versus a big guy story. This is little guys have lit a match and the big guys are fighting it out. I don't see how the brokers could not do something like this, because this sort of action puts the brokers' balance sheets at risk.
Yeah.
Sorry.
It's going to be interesting because, particularly from Robinhood's perspective, they just made their core customer base incredibly angry. Like incredibly angry. I would be interested to look at, if you go look at the iTunes or whatever reviews for the app, I bet you they've dropped like 50% their rating just today.
Yeah.
Because, it's going to be interesting to see what implications there are for them. If
those aren't their customers, though. They pay them $0 per trade.
Well, that's true. Citadel's the customer,
Capital
right?
Management is their customer, who pays them so that they can step in front of these people. That's their business. That's their business. A lot of people don't. I guess people don't really think when a trade is free, when anything is free that a company is giving you, you are the product. You're the product. Like, they had to figure out how to survive this, and they're getting paid by hedge funds. And let me tell you what yesterday's price action tells me is that hedge funds were selling down their shorts, and they were de-risking as quickly as they could with a lot of their longs. This is what a rebalance looks like.